Perfect. Thank you for confirming that. So we are live now. We are recording. So let's get into it. So beginning on the someone's put II captain. Nice one, thank you. Beginning on the DXY. So on the weekly time frame at the minute, as you can see, what I marked on yesterday was this weekly imbalance. Obviously, we've filled that. We've got 3 days, 14 hours of this weekly candle. So this could be, well, it could actually be a wick potentially if we do decide to come down. So I'm just leaving it and seeing what we do for now. So if we go on the daily, obviously we filled that area that we had marked on a couple of days ago or even last week. And we're obviously still within this bearish leg. And we've got a 4-hour imbalance there. Obviously we've filled that one there. Let me take this off now. Let me take that away as well. Actually, let me take that off of the 4-hour and the daily. So we're still within this bearish leg. So we still could get a reaction from around where we are now. 4-hour wise, obviously that's that area there that we had marked on. So we've blasted through that through the night. Okay. So we've got that there, right? The nice thing about this one is we have liquidity below to take, rather than, obviously we didn't have any liquidity to take before this one, but this one we do. So we could see a reaction from this one. So that would be very nice. So that's the DXY. Let's go back to the daily. One thing to note as well is on this, we've also come into a discount of this leg. So let's not get too tied into the fact that we could make a new leg down, because let's remember that we've achieved a discount. So we could actually go higher, because let's not forget as well, look what we have there. That's actually a gap, right? But I'm going to mark it on as an imbalance. So daily imbalance up there, okay? So that's not, oh, sorry, wrong one. That's not off the cards. That's still possible for price to achieve. Yeah. So there is that, okay? Obviously, the confirmation of that, if we do decide to go up, would be if we close above this, break this last lower high and close above it, because then the 4-hour structure would have aligned back to bullish. Obviously, currently this is bearish, so that high would need to break. Oh, sorry. There you go. That high would need to break, closure above, so something like this, closure above, and then whether or not we just continue up, or we might get a retracement into something down here before going up. Okay, so we've got both sides of the fence there. We've got both sides of the fence. So back to the daily. Oh, sorry. I'm going to leave that on there actually, just for reference. Just for reference. I'm talking about the Fibonacci, by the way. I'm going to leave that on there. So let's go into. We want this list here. Pound yen. Okay, so pound yen, we have blasted through and up to this area now. So this is the area that we were speaking about last week, in fact. If we didn't react from this level here, which of course we didn't, we had a minor reaction and it gave us the confirmation to go short, but we got stopped out of that at break even. That's fine. So now this is the second point of call for any shorts to be valid from here. Obviously, this here is the target for the short. This here is the target for the short. Coming in at around, I think we've got it at 89400, looking on the right hand side of the screen there. And that'll, yeah, so that's what all that is just daily quote support. All right, so if we do decide to come down, that's of course within a discount of that leg there. So that's all that's based on, right? So down into the 4 hour. So the 4 hour candle was just closed 6 minutes ago, 7 minutes ago. Very nice rejection from that level, I will say that. You can just read that with the wick. So that's nice because obviously we are in the shorts right now. So yeah, so far so good, I would say. So far so good. Obviously nothing is 100% of the time. We can only take it as it comes and read what we see on the chart. Okay. Read what we see on the chart. So that's GJ. That's GJ. There's nothing too much to discuss other than the fact that, like I said, we could come down into there. We're going to be taking profits off there and we will see how we go. Obviously, like I said yesterday, we do have a weekly imbalance above, but I'm just keeping that on there for reference. You can see I've also got some daily levels within that or around that. So let's go to the daily and let's scroll to the left all the way back here. Okay, this was in 2015. So that's just taken from those bodies and those bodies. Fairly simple. And obviously I've got that there, look. That was a nice level of resistance on the daily time frame. Okay. We can actually pin that to there. Actually, no, I'd rather take it to there. Okay, so nice area. We've also got a monthly turnaround point there as well, look. So just to go on the monthly to recap. Many wick rejections there on the monthly. A nice one there. Blast through. Rejection. And we're currently obviously approaching that. We've also got a monthly imbalance there as well. So all of these things are worth keeping on and worth noting. Okay. So yeah, but currently we are in the shorts. We're not expecting, new lows. We're not expecting all these lows to go. All we're expecting, or all I'm expecting, is for price to come down into here. So that would be nice because that gives us a 2R. That gives us a 2R. So that's the trade there. That's the trade. Okay. So this was printed at 7 a.m. We're closed at 7:30 a.m. UK time this morning. Okay, so a nice time to enter a trade. So obviously London session. So let's see. Let's see what happens. Again, risk is managed. That's all we can do. That's all we can do. So let's move on to pound dollar. So pound dollar is actually at a nice level now. Is at a really nice level. So let's go to the weekly. Just to recap. Let's just take this off. Okay, so on the weekly time frame, we've obviously now filled this weekly imbalance. We're now actually technically within this weekly demand area, this bearish candle before the bullish move. We've got many monthly wick rejections area, okay? So that's just how I've worded it. You can word it however you like, but you can see many monthly wick rejections at this level. So yeah, that could be a nice level that we reject from again, potentially. So also what we're now in is a discount of this leg up. So from this low to that high, bringing the Fibonacci on there. Okay, so if we were to get into longs, I'm not going to be targeting another high. I'm not going to be doing that. I'm not going to be targeting that. I'm not going to be targeting even the imbalance up there. What I'm going to be targeting if we get into longs is the equal high, right? And I'll explain the area as we go down into the time frames. But for now, obviously weekly time frame, we've got a monthly imbalance down here. So this could be filled. So in other words, what I mean by that is as well is if we have a long, something up there could be used to then push price down lower. But that alone would give us a decent amount of percentage, pips, however you want to word it. Okay, you can see that's 170 pips. So my thought process is, as we go down into the daily, start to see things a little bit clearer, hopefully. That's the low, that's the high. We're now within this 5618 area represented by this grey box, right? Look what we're also now sitting on, this daily support. Yeah, so created there, used many times. This was created in January, 23rd of Jan. Many wicks through, wicks, blast through. So can this be used again, basically, is what I'm trying to say. Another area which we can see clear as day is this daily imbalance. So there is a potential for that to be filled as well. So we'll have to look out for that. And a daily level lower than that is that right there, okay? 1.26245, right? So the reason why I say it's obviously at an interesting level is because of what I've just said. We are now in buying territory. It's just a case of waiting to see what price gives us, okay? Whether it comes down lower before we do anything, comes down to here maybe, I'm going to be keeping an eye on price. We've got that daily imbalance there as well. So an area at which I would target, by the way, like I said earlier, I'll get into it, would be this level up here. However you want to play it, that right there is what fits my plan and what fits my system, okay? So this system that I'm trading right now actually allowed me to get this, what you see over here, the 350k account of FTMO. That's what allowed me to get that account, or those accounts, and I merged it into one, basically. So take it as how you want, but you know, I know that it works. So yeah, what I'm going to be looking for now is a 3-pin, simple 3-pin. We've got 16 minutes left on this candle. It could be this one, it could take longer, it could come down here, it could play around, it could do this, it could do that. So this is why it's important to monitor the charts and to monitor the price where we're at, specific points of interest or areas of interest. So that's GU. Let's go on to USD CAD. So USD CAD, obviously we fulfilled that 4-hour imbalance that we spoke about yesterday, which also aligns with the DXY. But the DXY, like we said, it could just tap up into this one before doing anything. So we'll have to wait and see. Obviously, we are in shorts on this as well, based off the fact that we came into this daily level there. That was obviously in a premium of that leg. Yeah, from that high down into the low. Came into premium prices. It formed our 3-pin pattern. And that was the trade. Obviously, we are now within that 4-hour imbalance. And the nice thing actually about the trade was the fact that, so I took it on the 30-minute right there. So again, formed at 7:30 a.m. You can see down at the bottom, that candle opened at 7 a.m., closed at 7:30 a.m. 3-pin, stops above the high. So we're still in this trade. And yeah, like I say, the nice thing as well was the fact that we wicked into this 4-hour imbalance. So yeah, it's just a case of waiting, see what we do. If we do decide to come higher, the last line in the sand for this, if we are going to go short, is this high here. If we reach there and form another 3-pin, I'm going to get in. It's as simple as that, because it's all about trusting the process, following the plan. You know, if the market isn't going to make it easy for us to make money, you've got to remember that. It's not going to make it easy. But as long as we're being consistent in our approach and consistent in our methodologies and entry models and exit models, that's what gives us an edge. So just keep that in mind. You know, it's not the end of the world if we take a couple of losses in a row. It really isn't. We have to zoom out and look at the bigger perspective. So yeah, that's USD CAD. Also, let's just zoom out a moment. So I have moved an area on here, and I'm just going to explain that. So if you look on my other lives, my weekly level was down here, but I have moved it because because it is more of a zone, I will say that. But this area also is very valid and it could be revisited, which is why I've got it on there. So 1.36225. You can just see there, just by eye, how many times that's been respected or tapped into on the weekly time frame. Okay. So yeah, I've just got that there. Yeah, like I say, on the daily though, that's the last line in the sand. Obviously, the nice thing as well is the fact that we have broken 4 hour structure. But again, that's not to say that we are 100% going to continue down. Again, the market isn't going to make it easy for us. It's always going to throw tricks here and there. It's always going to test your patience. It's always going to test your risk management, you know? Because if you have, for example, 2 or 3 wins in a row, your confidence is going to be on top of the world. You might even now up your risk, but then guess what? That's when you go into a losing streak. So, and then you'll end up negative to what you started before. So again, it's all about being patient and being disciplined and being consistent. Much like any other skill in the world that you want to master or be good at. So that's USD CAD. Let's go back to the daily. Let's look at euro dollar. Okay, euro dollar obviously falling off a cliff. Coming down into this, by the looks of it, 5618 area. We've got a 4 hour imbalance on there. This is looking a little bit messy. I'm going to tidy this up a little bit. Let's get rid of that. This area was obviously the 5618 of that leg down. Okay. And also on this, let's just have a look on the weekly. We've got the weekly imbalance above this high. So the fact that we're coming into a discount now or near a discount, price could react from something in here and then achieve that potentially. So that would be a very, very nice setup, to be honest, if and when that happens. So within this area, we've obviously got weekly wick rejections at 1.08, psychological number there, round number. Again, you can just see how many times that's been used in the past. Many times there, wicked into it, lovely there, used it there, rejected, came up, rejected, etc., etc. Okay, going down is the daily. I can actually remove that now, that 4 hour imbalance. I'm going to take a few of these off as well because it's sort of irrelevant now. Okay, so remember, chart hygiene is very, very important because if there's so many lines and things on your chart, you're going to get very, very confused. You're very, very confused. Daily imbalance there, filled as we marked on. Okay, last week, rejected. Very nice move out of that. So even that, obviously, you could keep that on just for reference, but because we've used it, I'm just going to take it off now because it's. I personally, once an area has been filled, I don't look at it anymore. I know other traders will continue to keep that on, etc. But that's just the way I like to look at it or sort of have my charts. Okay, so on the daily time frame, if we do come into here, we've got that daily. Let me just get rid of this. We've got that daily level there, the two bodies bringing that through, which also aligns very nicely, as you can see, with the weekly level. So I'm just going to leave that on there. There's no point drawing another line on there. Again, because it's sort of pointless. So that's pretty much it. On the daily, we've got that one there. Okay. And also we've got a monthly turnaround point right at the lows if we do decide to go deeper into that leg with the daily level there as well. So 4 hour. Okay, you can see a few 4 hour levels that I've got marked on here being respected very nicely. Just taken from the bodies. There was a beautiful reaction from this one right at the high. You can see that 4 hour bodies bringing it through, wicked into it, shooting star closure. So if you are more of a swing trader, the 4 hour still works. Well, any time frame works, to be honest, if you're reading it correctly. But look at that. That could have been an entry if this is your style. 4 hour shooting star, stop above the high, and away we go. Obviously, this one here was used. We wicked into it, closed below. Gives us a clue we're going to go lower. this one here was used, wicked into it, closure below there, look, gives us a clue we're going to go lower, continue down. So now, obviously, like I just said, we've got the 4-hour imbalance there, which also aligns within this. Sorry guys, I thought I went over the time there. No, we're all right. Which also aligns within this 5618 area. So yeah, we'll have to wait and see. We'll have to wait and see. The nice thing about this as well is, similar to the DXY, but obviously inverted, is the fact that we have liquidity above. Okay, so if I just invert this just for a moment, you can see how that's very, very similar to the DXY. So if you just take a mental screenshot of that, I'm going to invert it back and then go back to the DXY. You can see that's very, very similar. Yeah. So again, just picking up the clues of the market. That's all it is. Picking up the clues and making informed decisions based off of those clues. So that's euro dollar. Let's look at gold. So gold continued to come down from where we said yesterday. Obviously, again, using what we know. So let's actually first dip into the daily time frame a moment. Let me just take these areas off the daily. Okay. So what's that level there? 2 seconds, guys. Sorry about this. Let me take that off the daily. Okay. Back into the daily. Right. So again, using what we know, just reading price action. Look at what we did there. So closure below gives us a clue we're going to go lower. We've gone lower. Look where we've actually wicked into though. This wick high here, which was created on the 4th of December last year. Right. So obviously there's a lot of value here within the market because, you know, a lot of profit taking was obviously made here because look at that wick. So we've obviously blasted through that. We could use it as temporary support. We could, which is what we could be doing now potentially, because if we go into the 4-hour time frame, we've also got a nice level at which price is just wicked into there. So we could look at this two ways. It's either fooling people that are going to go long, which it could go long based on the fact that, you know, we are bullish technically still overall, or it's just wicked there, it's just got a taster for it, and then we could get a closure below in the future, right? So if we just have a look at euro dollar or any asset, to be honest, we'll do this. You see how this, for example, this 4-hour candle wicked into it, this initial one, another wick into it, so looking like it's going to reject, and then we have a closure below. So sometimes it likes to test the water first before doing anything, either going up or going down. And obviously, again, reading the price action is going to give you a lot of it's going to give you excuse me, I need a drink. It's going to give you a advantage. Yeah, so that's the idea of that. So yeah, gold, I'm just keeping an eye on it. We've got areas down here, we've got that there as well, which could be used, because technically speaking we're still within this. So price actually could pop up, take that high there because that's liquidity, clear as day, come into that daily level and then potentially sell off. The nice thing about this is, look, we've got 618 extension with those 4-hour bodies. That's nice. So yeah, we'll have to wait and see what that does. Take that off. Euro yen is actually very similar to GJ. Very, very similar. So just zooming out a second, weekly imbalance to the high, if we remember marking this on, just there, look, bringing that through. Obviously we are bullish, we can see that, very, very bullish. Again, following that structure, we've now obviously achieved a discount of that. That's what that grey box there represents, 5618. And obviously we've got the extensions which do align nicely with the imbalance above. So there was actually a short opportunity on this pair, which I didn't share out with the members just because we're already in a pound yen short. So doing that would basically double your risk for the same trade. So that's the reason why I didn't send it out, but it's the same setup. So we've come into a daily level there. Okay, daily, down into the 4 hour. Again, nice reaction on the 4 hour. Obviously, it has closed bullish, but it was still a nice reaction. And the entry, so to speak, was the same as GJ. That. And it was the same time. So opened at 7 a.m., closed at 7:30. Stops above the high if that does interest you. But that's, like I say, that would actually double your risk on the same trade idea because they move very, very similar, GJ and EJ. Yeah. So again, you can see that just as I'm flicking between the two of them, very similar look. So yeah. So that's Euro JPY. If we do decide to go higher, obviously we've got areas to look at. This is the quarterly turnaround point. So that is what it says on the tin. We've got a daily level there, look. On the level, basically, on the quarterly level. So, and that would be the last line in the sand for this before we reach there, I would say. So the idea behind this is where if we do roll over would be a target. The reason being is because that would then align within the 5618. And look at that extension of that. It aligns at the quarterly and it aligns at the daily level there. So we'll have to wait and see what that does. If we do come down into here, that would be a great opportunity to go long, 100%. So we'll have to wait. But yeah, that's about it, to be honest. We've covered quite a lot in that one. I hope that all made sense. I'm using similar concepts throughout. So, I'm not doing anything out of the ordinary on one pair than I would another pair. That's what I said earlier. It's good to keep things consistent and in uniform because that's going to firstly simplify it, and secondly, it will make us profitable if we're continuing to do the same thing over and over again, as long as that thing is proven to work. Yeah. So, yeah, that's about it. I hope you all enjoyed this live. I hope you all took value from it, as always. And I will see you on the next live in just under a couple of hours. So thank you guys. Take care, and I'll see you in the next one.